Hey guys, welcome back to the channel. Thank you for joining me today. Today we're going to be talking about two special purpose acquisition companies that I might have to put some money in when the market opens tomorrow, okay? And I believe that these two players are undervalued relative to the whole SPAC community out there right now, which of course, as everyone knows, is flying high, especially with the EV stocks, the EV charging stocks, and the EV battery stocks, all right? But first, before we go into these two, I just want to say thank you so much for all the support you've given me. We're over 700 subs, so less than 300 to go before we reach 1,000 subs and we're able to apply for monetization. I just want to say thank you so much for the support, guys. Okay, so first one is ticker symbol FEAC, Flying Eagle Acquisition Corp. And I mean, look at this run up. This run up has been about over like the past 5 days, just 25%, but over the past month, 43%, okay, which is definitely not as high as some I've seen some of these SPACs fly, but still relatively high. So, I might wait a bit, try to see a dip in this market, and if there is a dip, I might go ahead and buy some. But this is a really, really cool company. And the company that this is going to merge with is, of course, Skillz, which is an online gaming platform that is pretty much transforming the space, okay? And we can see that it's won a bunch of awards. And what I like about this company, as well as the next company, the next SPAC company that I'm going to announce, is they actually have revenue, okay? So their third quarter results came out and they were up 60 million or 92% year over year, and revenue year to date was up 91%. So look at that double digit growth, and they're affirming their revenue guidance of 225 million for the full year of 2020, which is really amazing. Okay, so of course, it's the competition layer for the internet in the online gaming space on mobile platforms. Okay, so they are building games that people, they don't just like, they love, based on a couple of factors. Okay, and one, we can see that the minutes per user per day on Skillz is 62 minutes, so over an hour, versus the next best competitor, which is TikTok, which is just 52 minutes. Okay, so this is very impressive. TikTok, highly addictive platform. We can see it's even higher than TikTok. All right, and what I like about this, it has a very, very interesting set of rules, and what they're doing is that they're actually allowing, of course, developers to develop these games, and there's more interaction between the gamers and the developers, so there's more engagement, and more engagement equals greater revenue. Okay, so really, really interesting. I already went over some of these stats, like 225 million projected revenue for 2020, right? And of course, they might even beat that. And this company, of course, is benefiting in a massive way due to the pandemic, right? So people are playing more online games. They're going more on these platforms. So the only concern that I have as a potential investor in this company is, of course, what happens when we have the vaccine, which looks like it's just over the horizon, thank God. But what happens beyond that, right? Are people going to get off of these games and platforms, right? Like lower monthly usage of sites like TikTok, like Skillz, like Instagram, right? And we'll just have to see. But that's my only concern, I have to say. Okay, and let's look. I'll just minimize this. Let's look at what they're doing with their business model, right? So what happens is you have two gamers. They pay a 60-cent entry fee, so that gets pooled, and together they create $1.20. $1.04 goes towards developers, goes towards the top prizes and incentives. So you're left with 16 cents, right? And so that's total, that's revenue right there. They have 95% gross margin, which equates to 15 cents in gross profit. And from that, you're taking 11 cents of operating expenses, which leaves you with 4 cents, which leaves you with a 25% margin on that. Okay. So that's their business model, which to me is really fascinating. I know that Amazon has tried and failed at doing this type of business model, but again, it just hasn't worked, and it looks like Skillz is doing it incredibly well. Okay, and we can see that there are like exponentially more game developers today compared to 2009, where there were 30,000 game developers, whereas now there's 10 million game developers. So that's amazing, right? So what they're talking about is how the old business model doesn't work anymore. So ads interrupt gameplay, and in-game purchases, which of course you can find on any app, they lock users out of content. So it's like pay to win pretty much, right? And we can see that this kind of model also doesn't benefit game developers, right? So the revenue per install for the best iOS game in the world is like $21, whereas very, very soon enough, you get even below of the cost it takes to create these games, okay? So what they're doing is very different. They're redefining entertainment. Again, very, very interesting. So um, what gamers value is community and fun, but what the old model offers is pay to win and interruption. Same thing with developers. They're looking at discovery and monetization, but what they have is broken economics and gimmicks, okay? So again, what this model offers is meaningful connection, fair competition, network exposure, and financial success for the developers, okay? So really, really interesting, all right? And if I just want to go back and look at this total addressable market, all right? We can see that they have like such a huge share, especially the international share of 125 billion plus, okay? So they're planning on going global and expanding their content for the unique distribution of course, Skillz, okay? And let's look at sort of the technicals of this deal, all right? So we can see here on the right, it's nicely in a diagram. So we see that this Eagle Acquisition Corp shareholders are going to account for 18% of the total pie after the merger occurs, okay? So what does that mean? That this means that with a company that's 3.5 billion, oh, excuse me, that's 3.5 billion in terms of its equity value, 18% of that results in $630 million, okay? And as we can see, their share price right now represents $1.4 billion, which represents a 2.2% increase on the $630 million dollar equity stake that Skillz is expecting to have after this acquisition. So this means this is trading at a 2.2 times premium to what the market cap is expected to be, right? So this means that the market cap would have to be over $7 billion to justify this market cap right now, okay? However, this is not, that expensive compared to some of the other SPACs, especially considering that a lot of the other SPACs have zero revenue, okay? They just have projected revenue, right? So, this is becoming a very increasingly interesting proposition to me, and I might just have to buy some shares of Flying Eagle Acquisition Corp before the merger, because after the merger, what usually happens is there's an incredible run up in the stock price, right? So what you usually have to do is you get in before, even though that it's technically overvalued. This is a growth company, right? So what I'm saying is this is a risky play, but it could provide a future reward if you hold this company for a couple of years, and I expect this run up to continue. So I might have to buy some shares in Flying Eagle Acquisition Corp, right? And I mean, I really, really, really like this company. And I don't think online gaming is going anywhere anytime soon, especially if they're considering that they're planning on expanding to the global market, okay? And finally, one last thing I want to say is that if we're looking at comparable companies benchmarking, uh, so annual growth of their revenue is expected to be, 57% compared to the next competitor of 45%, and they also have lower costs compared to other competitors. And again, same theory represented by these two charts. Okay, of course you can pause it and go through these charts. Okay, but I want to go to the next company called this company is merging with AvePoint. It's called Apex Technology Acquisition Corp, ticker symbol APXT. And right now I've been watching this company closely. I did a previous video on it, and I wanted to buy shares, but unfortunately I missed out on this huge run up. But now I think it presents an attractive proposition, right? So we can see still over the month it's up 33%, again, which is not much considering some of these other SPAC plays have been up tremendously, okay? And it's actually down from its highs by about 10%, right? So I think this could present an interesting proposition, okay? So let's again take into account the market cap of 614 million, and let's take a look at what this company is doing, okay? So first off, it's going to combine with AvePoint, to create a publicly listed company with a $2 billion market cap. Okay. And so with a $2 billion market cap, and we can see that 21% of Apex public shareholders will form from the APXT stock. Okay. So what that means, a fifth of $2 billion approximately would mean that this company should have a $420 million market cap, which represents that this company is trading right now at a premium of about 1.5 times its projected market cap, right? So right now, this company would have to be valued at around 2.5 to $3 billion to sort of confirm this price right now, right? Again, which is not much considering how other SPACs are trading at, right? So again, right now I do see this as a deal, especially since once they're listed on the NASDAQ, which is expected to close in the first quarter of 2021, usually companies like this run up quite a bit, okay? So it might be an easy way for them to make cash, okay? So let's go over the company overview. We can see it's the leading data management solutions provider for the Microsoft Cloud, which is again an expanding business. Okay, total addressable market growth to be around 33 billion by 2022. And again, another thing that I like about this company, it's already established, right? They have over 1,300 employees in 29 global offices, and again, it's partnering or it has Microsoft Cloud as its strategic partner. Um, and let's look at some of these projected growth opportunities, right? So they're expecting 148 million in revenue, 30% growth, and again, new capital to invest in their financials, all right? So of course, this is a data management company, right? And this is becoming increasingly important as the amount of data is growing fast. Data governance is definitely getting hard, and it's getting harder. And of course, cybersecurity is a huge thing, which is this last panel here, right? So this company is sort of trying to transform the space in digital management of data, right? All things concerning like cybersecurity and protection of data, of course, to governing the data and how to back that up and all that stuff, right? So really, really interesting, right? And it's talking about the total addressable market based on a bunch of these big companies, right? Of course, Microsoft is one of the biggest companies, right? And finally, let's look at their projections, okay? So they already have 2019 results, and we can see that this company is growing by double digits from 18% in 2019 Q1 to 25% in the fourth quarter of 2019. So this is very impressive, okay? And we can see, of course, 2020 first and second quarter, we can see again 27 and 29% revenue growth respectively. So that's very, very impressive, all the way up to $101 million in revenue, okay? And again, we can just see their revenue and also recurring revenue is also going up and is expected to go up in all the way through from 2019 to 2022. Okay, so let's look at some of their margins and again, some of their expected revenue. Okay, so we can see that year to date 2020, 2019, we can see it was $117 million. For 2020, it's expected to be $148 million, which is a 26% growth. And finally, in 2020, it's expected to be $257 million, which is 33% growth. So this is quite nice growth. I really like that double-digit growth, and I already like how it's proven to grow by this much over such a short period of time, okay? And let's look at their gross profit margin. So of course, we can see that in 2019, they're expected to have 69% gross profit margin, or they already had 69% gross profit margin, which is amazing for a company like this, okay? But of course, due to economies of scale, and because this is an online data management company, they're expected that their gross profit margin is actually going to increase in 2020 to 72%, and 2021 to, again, stagnant at 72%, but then by 2022, expected to be 74%, which means they're going to retain more of their earnings, which is very impressive to me, okay? So again, this is a company that I think now has an attractive valuation where you could potentially buy money in, and you don't have to actually pay much of a fee to actually buy in at these inflated prices. So again, I really, really like this company and what it it's potentially going to be doing. Okay, so if you do like these two stock picks, first FEAC and second APXT, and if you like the underlying companies, of course, do your own research before buying and selling, but let me know what you think and if you already own or you're planning on owning any of these shares. But again, thank you for joining me today. If you like this video, consider giving it a thumbs up, and of course, subscribe if you haven't already. Road to 1,000 subscribers. And again, you can check out a bunch of links down in the description below, like real-time buys and sells that I'm going to be doing by clicking on the Patreon link and a couple other free trading apps. But yeah, that's it for me. Thank you so much for watching, and see you next time.